Good morning, copiers. It is Friday, the 4th of December, and this would usually mean that I'm going to give you my Copier update for the week, and I will, but I'm going to do a shortened version because I've been getting a question quite a lot about cash in my portfolio. So I wanted to spend some part of today's video talking about my cash strategy. All right, so let's get into it. Okay, so I'm not going to go full screen, but I will share this presentation as part of the within the description of the video. So the questions that I'm getting are roughly, I see that in my Copier view, only 90%, 85%, whatever the percentage might be, of the money that I have with you is invested in stocks. What about all the free money? Should I withdraw it? Is it going to be used? I feel like it's not being used to accumulate any benefit if there's so much free cash in the copy. And this has become a little bit more relevant as I've added more cash this week to my portfolio. So the cash buffer is even larger than usual because now I'm waiting for people to add funds. You have until the end of next Thursday, by the way, if you want to do that. So I wanted to talk about cash strategy and why it's important as a part of my strategy to have some cash in the portfolio. All right, so just for a moment, looking at the portfolio overall, the individual positions in a portfolio are important, of course. So these are the things, the bits and pieces of the puzzle, the parts of the machine that are used to make money, but they're more than that as a whole. So obviously the portfolio actually is a sum of its parts, literally, but metaphorically speaking, it is more than that, because my portfolio is made up of a number of different assets. They could be stocks, they could be all stocks at certain points in time, but they have different risk portfolios. They have different risk values, whether that is the beta value, whether that is my perception of those stock. In some way, some of those stocks are high risk, medium risk, and low risk. And so I use all of these different parts of the portfolio to manage risk and reward overall. I don't expect all positions to win all the time, but I do expect overall the portfolio to win all the time. So my portfolio strategy, in a very abbreviated summary of my portfolio strategy, is I've got a core of stocks. So some of my core stocks would be Microsoft, as an example. I believe these businesses will have strong growth through the next few years. I will hold them. I will add to those positions. I'm probably not going to sell them for years. I then have some core crypto. So there are certain cryptos that I believe are less risky than others. They almost certainly have a place on the world stage. And so some part of my portfolio will be dedicated to those core cryptos, and I will likely hold them forever, for a very long time, at least, many, many years. So cryptos are higher risk than stocks, so these will always remain a fairly small portion of the portfolio. And then there are opportunistic stocks and other assets. So these are maybe slightly higher risk assets, and I believe that for the short term, something has happened that means that they are worth buying. Whether they've lost a lot of price, that their price has dropped off quite a lot, but the value of the stock is still really good. Or perhaps there's a piece of news that means that in the short term or the medium term, they're going to do very well. I will pick up those bits and pieces of assets. I'll add them to the portfolio, but I will likely shed them quite quickly too. Quickly in this case being anything from hours through to maybe a couple months. And then there's cash. So cash is very important to my strategy. Cash is just another asset in the same way that stocks, cryptos, commodities are all assets. And it's important for a few reasons, and I'll go into those in the subsequent slides. So my risk is managed at the position level, So at a micro level, let's call it that, but also at the portfolio level. All of these assets that come together to collectively form a portfolio strategy for me. All right, so why is cash so important? I think when you are new to trading and investing, this can easily be overlooked. But cash management is incredibly important to the way that you handle risk. The problem with cash is that inflation will reduce the value of that cash over time. You do not want to have too much cash on hand, and you do not want to have it on hand for too long. And so you want to keep the amount of cash on hand a reasonably small part of your portfolio, but that does depend on economic and market conditions. So how does it work as an asset within the portfolio? Well, it provides a short-term hedge. So if the markets are falling, so let's say you have, let's exaggerate, 50% of your portfolio is cash, and your stocks fall 50% in value for some reason, right? Something terrible has happened. If your entire portfolio had been held in stocks that had fallen by 50%, you would now be down 50% overall. But if half of your portfolio is in cash, you are massively reducing the total drop in your overall portfolio value. Now, on the other side of this coin, if those stocks had doubled in value, obviously holding so much cash in hand means that your portfolio has increased by less than it could if everything was in stocks. So you need to find some kind of a balance according to your risk appetite, as well as the context that you're working with and that you're trading with. The other additional boon is when the market does consolidate, and the market always consolidates, right? So whether it drops off by 2% or 5% or 50%, after every bull run, and you can never call the time on this, but after every bull run, there is some consolidation. So if you have some cash on hand and the market does fall, then there are stocks that invariably will be cheaper for you then to buy in and get them at a discount from the high prices that they had climbed to during that bull run. So I think these are the two key value propositions for having some cash in your portfolio. So in terms of my cash strategy, the things that I do with cash, as a bull run extends, and this is not just me, by the way, this is the way that a lot of professional investors and investment houses and trading houses will operate. As a bull run extends, professional investors become more and more nervous. Stock prices become higher and higher value. The stock prices become higher, the value of the underlying stock doesn't necessarily increase at the same rate that the stock price does. So I tend to slowly reduce my exposure to the stock market. I take those stocks that are typically high beta, so they're high volatility, they jump up and down in large increments, and I almost always reduce my exposure to those first, unless the business is incredibly promising in the short term. This means as the bull run extends, my cash position as a proportion of my portfolio slowly increases. And the thinking behind this is that when the consolidation does eventually happen, and it will, the longer the bull run goes on, usually the bigger the consolidation, by the way, I then have cash to then buy into those stocks that are now discounted, and hopefully some of them have returned to fair value or are even cheap with regards to their valuation metrics. How do I spend that cash? That depends on the type of correction, the size of the correction, what was happening in the bull market immediately before that. So I almost always will keep 5 or 10% of my cash in reserve, because you can't be certain that you found the bottom of a consolidation or correction or a bear market. So I will keep some cash in reserve, and if the correction carries on going for a very long time, I'll continue buying in to average down, because after every bear market, there is a bull market. All right, so then the correction ends, the bull run begins once again. I will hold until I feel as though that bull run is starting to look a little bit overvalued. The stock stocks within that, the assets within that bull run are looking a little bit overpriced. And once again, I will then repeat the process, jump back to one, and so the process continues. And this is how I more or less manage my cash at a high level. So what this means for the portfolio overall is that on average, I'm usually carrying about 10% of the portfolio as cash. I would say this probably moves between 7 and 10% in a normal quarter. If anything dramatic happens, so now I've just added cash, so it's grown by quite a lot suddenly, or if there's a huge dip in the market, that will change. And so I do accumulate cash as bull runs extend, but because you can never know when a bull run might end, I am very nervous about converting too much of my portfolio to cash. And some of my core stocks and my core assets, I believe, will continue to grow no matter what happens to the market. Bull or bear cycle, whatever we're in, there are certain companies that are just rock solid and continue to look rock solid and will grow over the next half a decade to a decade at least. And so I'll keep those. During corrections, so massive corrections, I will potentially draw down all of my cash. So I think through March, I can't remember the exact timing, the market just carried on dropping off and dropping off and dropping off. And I'd spent all of my cash and it carried on dropping off. And so I added a little bit more cash to my portfolio to continue to buy. And I've said this a few times now, but you can't know the times of things. So I tend to buy into bearish cycles, corrections, and consolidations over a period. I wouldn't spend all of my money on the first day, example. Okay, so I hope that helps. I hope it hasn't been too long-winded, but that's more or less my cash strategy and why I keep some cash on hand. It's important for me and my strategy to have some cash at all times. So I wouldn't withdraw cash from your copy. It's not that that cash is lying there latent. It is part of the way that I do things. And don't look at the amount of cash that is sitting in the portfolio free. Look at the returns of the portfolio overall. That's all you need to look at. How much money am I making from this copy overall over a decent time cycle? Don't worry about the little bits and pieces inside. All right. Okay, so let's move on to the next piece. I'm going to do this as quickly as possible because I've already used quite a lot of time. So November was a good month for the market overall. I think the Nasdaq and S&P both had double-digit gains. My portfolio beat out both of those for November. So the hedges that I've had in place for 6 months or so, the assets that were outside of US tech, bore a lot of fruit through November. So a 16% return for the year, for the month. And that means that November is my best month of this year. The year-to-date return is 42.47%. And if you had been copying me since June 2015, you would now have a 522% return. So if you had invested 10 grand in me in 2015, you would now have $62,000 or pounds, whatever you chosen to invest with. All right. In terms of the week gone, I've been watching the market very closely. Obviously, let's start with I've added funds. So to the portfolio view. So as I said, I'm holding nearly 20% of my portfolio as cash at the moment. There aren't a lot of good opportunities in the market. Before I added cash, I already had 10% of my portfolio as cash. That's why we've got such a big buffer for now. I have been buying a few positions through this week, but not many. So probably notably, I bought some BIDU. BIDU, basically Chinese Google. The valuation, the stock price is ridiculously low based on the fundamentals of that business. That's just, we'll just sit on those for a while and eventually the market will realize the mistake. I've also bought some of Salesforce. So their stock price dumped on the acquisition of Slack. And this is because they paid a lot of money for Slack. They had to borrow a lot of money and they will dilute, they bought Slack through a combination of cash and stock. So as they issue more stock to buy the company, the price of our stock will be diluted. So it will be worth less. I closed out my last Slack position. Some of you might have noticed that. And I had 3 positions. I sold 2 when the stock price spiked, and I sold, this was just pure luck. I sold before the official announcement of the acquisition was made. The market cap of Slack is very close to the price that Salesforce paid for Slack, so I don't think the stock price is going to move very much from here on out. If we look at indexes, so there's a little bit, I expect the action to be frothy for a while yet. Yesterday they were up a touch. It looks like they're going to open up a touch today, but I wouldn't be surprised if they just bounce around this price level for a while. In terms of crypto's had a pretty decent run. I am very bullish on crypto. I'm not sure the time frame, but the price action, I can feel the excitement in cryptos bubbling away. We're definitely still in a bullish market. What else? So Black Friday set some new records in retail. I expect this month to be no different. Christmas sales, Boxing Day sales. I think retailers are going to do incredibly well. You can see some of this through companies like UPS, who are restricting, they're placing shipping caps on the largest retailers just because they're having trouble dealing with the demand. So I think next quarter, the earnings reports for next quarter for retailers, particularly e-commerce businesses, Amazon, Shopify, the usual suspects, Apple, I think that they are going to have the best quarter ever, probably. All right, I'm very keen to see a consolidation in stocks. So, I mean, I'm happy that we have done so well through the past couple months, past few months. But I start getting quite nervous when there isn't, when there hasn't been a decent consolidation for a while, as will the professional investors. I get nervous because the longer the bull run is, the more professional investors become nervous, but they're hesitant to pull their positions out of the market because they don't want to lose out on the gains. And then suddenly something happens and everyone just dumps their stocks. And the longer that the bull run goes on, the more panic we see when there is the consolidation. But that'll be fine. We've got a decent amount of cash off hand, and I'm really keen to go shopping. I've got my eye on quite a few stocks. All right, thank you very much. Have a great weekend, and I will talk to you all next week.